be taking you through a technical analysis in this video. Please remember to subscribe to our channel and keep posted, and the notification should be on for the next video that's gonna be dropping soon. So let's get straight to the point. So basically you're gonna be using the tradingview.com, as you can see. So we have our technical analysis tools. You can see our technical analysis tools are there. You're gonna be analyzing Euro USD. Yeah, so we're gonna be analyzing Euro USD, as you can see. So we started our trend lines. So a trend line, as you can see, we get it from there and we put it around there. So we also the upper region, you can see a clear bearish trend. Insert our trend line around there. Yeah, so yeah, that's our trend line. And yeah, so for this reason I'm gonna be using two trend lines so as to just map out the zones for accuracy in this game. As you can see, I insert another trend line. I just make it in form of a zone, as you can see. Yeah, as you can see. Yeah, so whenever the market reaches at this point, like it has to react and bounce off. Whenever it reaches up, it has to bounce off, as you can see. So it will be a clear entry signal for our bearish trend. Yeah, so yeah, so let's get we can see another trend around there. So we put a trend line. That's how we draw a trend line. So always make sure that the trend line touches at least maximum of the points, like more of the points. Yeah, so as you can see, that's our trend. It's a clear bearish trend rather than. So the market just broke trend line and continued upwards. Yeah, so as you can see, so around that region, there's a strong supply region. So supply is where the price makes a very big momentum movement, as you can see. So when the market reached that region, it had to react, though after some time the buyers had control of it, and yeah, it broke out the structure, and it had to continue the bearish trend. Yeah, let's get backwards. Let's see. Yeah, so basically that's how we analyze the markets, trend lines, all these technical tools. As you can see in my side there, you can see. Yeah, so that's how we analyze the markets. So around this region, the market has been consolidating. As you can see, it has been consolidating. Then boom, it made a downward bullish move, as you can see. So yeah, so the market made a downward move, as you can see. So let's get back. Yeah, so around that region, we're gonna be having there's a clear trend around there. You can see, as you can see, there's a bullish trend around there. So basically that's our trend line, and yeah, it's our trend line around there. So always make sure that your trend line touches most of the points of rejection of the market, as you can see. So let's move backwards. Let's move. Yeah, so around that region there's a resistance around there, as well as a supply. So that will be a very good entry point for our sales. So whenever the market reaches that region, it has to bounce off. It made a second touch, and then boom, that's a double touch, and it reacted and took a strong bearish move, as you can see. So yeah, so it created a resistance around there. The market tried to break the resistance. That's called a fake out. Made a fake out around there, and then continued boom with a bullish trend, as you can see. You can see that rejection around there. Yeah, you can see, So basically that's how we analyze the markets. Strong supply region, a big strong bearish candle around there. So basically around such a point, the market has to react, as you can see. So yeah, so basically, yeah, so there was a strong bullish move upwards. So all of a sudden, the buyers had lost control over the market, and the sellers took control over it, as you can see by the small arrow consolidation above there. So below that, we have a consolidating market around there. That's a liquidity grip. So So basically that was very easy to grab, as you can see. Yeah. So let's get backwards. Let's get backwards to the chart. As you can see, around that region there, we have a strong resistance around there, as you can see. So whenever the market reaches that zone, it has to react and bounce back. And there's a strong support downwards as well, as you can see. That's a strong support level, as you can see. That's a strong support. Yeah, that's a support level. So basically when the market reaches the support, it has to react back, as you can see. So yeah, basically that's the support and resistance, how it works and operates. Yeah, so around that region, the market was ranging, it was consolidating, yeah, before making an upward bullish move, as you can see. So basically that's how we analyze the markets. It made a move up to there, boom. Yeah, so yeah, it was actually oscillating between support and resistance around that zone there. And then let's get backwards. Yeah, so basically that's how we analyze the markets. Yeah, so about the time frames, basically for day trading, I recommend you start from the daily time frame. We look into the 4 hour, then after we look into the 1 hour, 30 minutes, then 15 minutes for our entries. So basically I'm gonna start from a higher time frame. Yeah, so let's first look at this trend line. Let's see. We have a trend around there. We have a clear bullish trend around there. As you can see, the market is respecting our trend. Yeah, so yeah, that's a strong bullish trend, as you can see. So yeah, basically that's how we analyze the markets and stuff like that. So it's a very simple way of analyzing the market. So around that zone, we have a strong supply zone around there. As you can see, the market had to react. The buyers to control the market. Yeah, as you can see. Yeah, the market reacted around that supply zone around there, as you can see. So basically, boom. That's how we analyze the markets and stuff like that. So um, let's move backwards and see. So about the time frames, I'm gonna start. I'm gonna look at the 4 hour time frame. On the 4 hour time frame, as you can see, we have a bearish trend there, as you can see. We have a bearish trend that you can see. So we're gonna do a trend line. Boom. So that's our trend line. So yeah, we're gonna draw a trend line around there. So whenever the market reaches the zone, it's respect that, as you can see. Try extending as you can see. Yeah, so basically that's how we analyze our markets. And then boom, yeah, that's how we analyze our markets using the trend lines and stuff like that. So yeah, I'm gonna draw a trend line there. As you can see, it's a nice trend line. So whenever the market reaches the trend line, it reacts, as you can see. That's on the 4 hour time frame. So let's move down. Yeah, let's move down to a lower time frame. As you can see. So basically it's a big move that was built from a higher time frame. As you can see, we cannot see, so we can make our entries based upon these trend lines, as you can see. So yeah, that would be a very good entry point due to the double touch. As you can see there, as you can see. So yeah, as you can see, that's how the market plays out. You can see our supply area around there. Yeah, so that's the reaction in the smaller time frames. Yeah, so the bigger time frames help us have a clear view of the market. So the market broke out structure, reached out there, bounced back. So the buyers took control of the market again, as you can see. So yeah, that's a strong supply area around there. Yeah, so as you can see, I'm gonna map up that zone. So yeah, so whenever the market's gonna break a structure, that will be my take profit target, as you can see. So basically that's how we analyze the markets using this different time frame.